perfect time because we've talked about sectors, themes, a general outlook. It's the perfect time to address the big elephant in the room, which is recession, right? So, are we going to see a recession in 2023? Will the stock market crash? And everybody is sort of confused with these questions. What's your view, Sonam?
Yeah, so talking about the global market, not India, right? There is a probability of recession, and that's not me talking, but a lot of experts right now and a lot of people who actually try to predict recessions are saying that they might see a recessionary environment.
Hello guys, thank you all for tuning into this amazing video that will be talking about a lot of things happening in the market. So let's start with the introductions first, right? Well, I'm Siddharth Agarwal. We have Sonam Srivastava with us today. She's the founder and CEO of Wright Research. And as you guys know, the year is about to end, or rather ended by the time you watch this. You must be having so many questions in mind about what the markets would look like, what sort of sectors that performed well, and so on and so forth, right? So without any further ado, Sonam, on you, right? So let's start. It'll be great, right? If you could sort of give us a brief view about the markets, and you could tell us, the general outlook for the equity market when it comes to 2023. However, right before I let you speak, we ran a poll, right? And the poll results have been very, very interesting. The audience was, what will be the stock market returns in 2023, right? And majority of the audience sort of replied that about 47% people replied to the poll saying that it'll be more than 10%. So that is what we are looking at. So Sonam, over to you. What do you think? What's your general outlook about the markets?
Yes, yeah. So thanks a lot for the introduction, Siddharth. So first thing I'd say is that this initiative is just about this poll. We sort of ran around 10 polls, right? And that is
Absolutely.
what we're going to take people through in this video. We want to cover what the outlook for the next year is and try to make certain predictions and see, how well we perform in our predicting capability. First things first is, obviously, like you said, general market outlook, right? And this is a tough question. It is, if we could predict it, then we would all be rich. But but yeah, so but I think we can form a slight view about it. We are entering on a consolidation, right? Like the markets were flying high, and then we've seen some consolidation. There's a fear of recession that's happening a lot in the global market, right? That's the trend that everybody's talking about. US and the European markets going to recession. There are some pressures that people think that the global market would go into. But if you look at the Indian market itself, Siddharth, it is very, very strong, right? Right now, if you look at the growth outlook, if you look at how the industry is progressing, the capex that's happening, even rural demand, right? Things look quite well for India. Inflation is coming down, and the growth is coming back. So we are positive. I think I have a positive bias towards the India market. Obviously, we'll have to be sector specific here, right?
Right.
Like right now, if you ask me, the budget link sectors look quite attractive. Banking looks very attractive. Where people are capital expenditure, those things look attractive. Whereas sectors where
Right.
you're dependent on the foreign market, those look a little volatile, right? So I think that would be my outlook, to be a
Got
little
it.
selective and
Got
be
it.
positive bias towards Indian.
Perfect, perfect. I think this is a good start, right? Because as we go forward, we'll cover more of these questions and topics that we are looking at today, right? So
Mm.
you were briefly talking about sectors, right? And
Mm.
we are talking about predictions over here. So
Right.
Sonam, would you like to tell the audience like what sort of a sectors are expected to do well when it comes to 2023? And right before I let you answer, so
Yeah.
we did a poll, guys, as well, right? The question was, what will be the best performing sector in 2023? And to your surprise, we had like, four sort of options: banks, technology, consumer discretionary, and capital goods. And you guys would be surprised, like most of the people voted for banks. So that is what the audience thinks. So Sonam, what do you think? Which is the best performing sector for 2023?
Right. So Siddharth, I think banks are having an amazing run, right? And everybody knows that. And I would also, not disagree with the fact that, we are very
Right.
excited about the prospects of banks, right?
Right.
Banks, uh, so the story that's building up is that, the banking sector has done increasingly well over the past few years, and, the
Right.
books are getting better, credit is increasing, and the prospects are looking very strong. But
Mhm.
still, they have sort of lagged the general market over the last 2-3 years. So I think now is the time to shine, and given that the prospects also remain strong, right? It's not like the story is over.
Right.
The story continues to remain strong. So I think banking is a sector where, I would bet on. But along with
Mhm.
banking, I think there are a number of other, exciting themes that are coming up right now, Siddharth, right?
Mhm.
So like I touched upon, your budget linked stocks, right? Which you have to bet on before the budget, right?
Mhm.
Uh, and we could see, sectors where the government spends their money, which is like railways,
Right.
defense, uh, logistics, capital goods. Those sectors, is something that you have to bet on. Apart from that, if you look at the economy right now, Siddharth, not
Mhm.
just private players, but also the government is betting a lot on capital expenditure, right?
Right.
So if
Right.
you look at the capex right now, the government is spending a lot
Mhm.
on building the infrastructure. Apart from that, private players are spending on energy transformation, warehousing, etc., right? So I think it's a good time to bet on the manufacturing and the capital goods sector also. So I think those will
Got it.
picks right now. Yeah.
Got it. Got it. So that's pretty interesting, right? Because banking is definitely an interesting sort of sector to always look upon. As the economy sort of progresses, um, banks will eventually sort of make money by lending and putting out other products as well. However, when we're talking about the best sectors, it makes sense to also talk about the worst performing sectors, or the sectors that wouldn't perform really well in the upcoming year, right? And so we ran a poll as well, right? And the question was, what will be the worst performing sector in 2023? And most of the people, about 38% of our audience, think that technology would be that particular sector. And they've chosen this answer among metals, energy, and banks. So, what's your view, Sonam?
No, I sort of, again, looking at the global scenario right now, Siddharth, the technology sector in the global market is the most impacted, right? And if you look at the
Right.
story of India's technology sector, right? If you look at where do the clients for the Indian tech players lie, more
Mm-hmm.
than 50% of the clients are lying there in the US. Almost 70-80% are in US and Europe, right? So if those
Right.
economies get hit, then you will see an impact happening in the IT sector, right? Even though the currency is at a high,
Mm-hmm.
still, the Indian technology sector is facing some sort of crunch. So I think, people are correct in picking up the technology sector right now.
Right.
Might see that recovery happen there. It's not a surety that it's going to fall. The US market might also recover, right? But how the
Correct.
things stand right now, I think I would agree that technology seems to be a sector where, you could take some negative bets. Along
That
with
is
that,
fair.
yeah, along with that, see, pharma also is dependent a lot on the global market.
Mm-hmm.
Look at the global market right now. There's a lot of spending that is happening in the global pharma market right now. People are picking up global pharmaceutical stocks. If you look at the, resurgence of COVID, that's also a time where, pharma companies pick up. So I would again not say that
Right.
I'm negative on pharma right now, but pharma also gets impacted when the global markets get impacted, right? And also any
Got
other industry, right, which is dependent on exporting to the global market, that will be impacted when you look at the market right now.
Fair enough. That's pretty fair. So when we're talking about sectors, Sonam, it would also, make a lot of sense to talk about some emerging themes, right? Because even at Right Research, most of our portfolios are thematic based. So, according to you, what are the, sort of emerging themes for the upcoming year? If you could, briefly touch on that.
Definitely. So yeah, so see, I am excited about a number of themes right now, Siddharth, to be honest. Right.
Okay.
Uh, in the current market, you have, some very, very distinct themes that are really doing increasingly well if you look at it, right? And I think that is something that we have to focus on. We ask this question to the audience as well, right? So maybe we can talk
Correct.
about what people said.
Of course, of course. So the question that we asked the audience was, which will be a breakout industry in 2023, and their sort of answers are in line with the best performing sector, right?
Hmm.
So the audience has voted for PSU banks, and that's 39% of the audience, right? So that's the
Right.
majority, and they've chosen PSU banks over sugar, defense, and railways. So this is what the audience thinks.
Yes, I think, see, that's again a good answer by the audience. And we are obviously, banking sector, like we have been repeating. And if the audience follows our blogs, right, that we post, I think
Right.
PSU banks has been a theme that we have been writing a lot about, right, talking a lot about, because
Yes, yes,
PSU banks look very strong and the prospects are strong. The uh, NP
mhm.
cycle that's going down, and the rise in trade that's happening right now seems to be,
Right.
an exceptional period for these banks. So yeah, obviously banks are a big pick, a big theme to bet on right now. Along with bank, there are a number of other themes, right? So we talked about
Mhm.
capex, right? This is
Correct.
next budget will be, the last budget before the 2024 election, right? So the government is going to spend on capital expenditure, right? They're going to fund a lot of projects. They're going to spend on the economy a fair bit, right?
Cor-
So,
Correct.
so I think betting on capex, especially on defense, railways, logistics, road, right? Those sectors would be very important. And we are all seeing how the defense sector is performing, how the railway sector is performing, right?
Right.
So I think those are some good picks. Along with that, we are seeing a lot of movement happening in the fertilizer sector, sugar sector, right? Textile also seeing
Right.
some back, right? Because uh, there is global demand, plus the government is also incentivizing these industries.
Absolutely.
We really believe
Absolutely.
in the PLI linked sectors also,
Correct.
right? Which are going to get a
Correct.
lot of push in the budget. So, those are the things to bet on.
Yeah,
So,
which is pretty much fair, right? Because I would say when we ask the audience the question, right, about a breakout industry, the second option that they chose was defense, right?
right,
So most of the defense companies are sort of benefited from the PLI schemes as well.
right.
Hence that makes a lot
Yeah.
of sense.
Yeah, and apart from
Perfect.
that, also, Siddharth, like we have to also see the consumer basket, right? So if you look
Correct.
at the FMCG basket, right, or
Hmm.
the hotel sector, right, the travel sector,
Right.
all those sectors are doing well, and I think those are also, so there are quite a number of themes right now in the current market that we can be bullish about.
Absolutely, absolutely. And most of these themes are a part of Wright's portfolio, so you guys should definitely explore that as well. Uh, However, I believe now it's the perfect time because we've talked about sectors, themes, a general outlook. It's the perfect time to address the big elephant in the room, which is recession, right? So, are we going to see a recession in 2023? Will the stock market crash? And everybody is sort of confused with these questions, and we sort of asked this question about a global recession in 2023 to our audience as well.
Mm.
And unfortunately, but surprising that 66% of our audience voted that yes, we would see a recession in 2023. But what's your view, Sona?
Yeah, so talking about the global market, not India, right? There is a probability of recession, and that's not me talking, but a lot of experts right now and a lot of people who actually try to predict recessions are saying that they might see
Right.
a recessionary environment in the next year. That why is that? So some signals, right, that people look at, like the interest rate spread, that is signaling that a recession is coming. If you look at the rates
Right.
that are so high in the US market, the Fed has raised rates at a massive pace, right? And that's
Hmm.
going to have an impact, and it usually has a lagged impact, Siddharth, right? So if they raise the rates
Right.
last month, it takes a couple of months for growth to be hit. So people are expecting the growth to be hit. If there's a spike in inflation back in the US, right, then the whole thing
Hmm.
again takes a turn, and the Fed would start
Right.
not go down, and they'll keep on hiking those rates. So there is this, given these scenarios and what's happening in Europe, this energy crisis that's happening with the Ukraine Russia war,
Hmm. Hmm.
these things are, all these reasons have come together, which has led to the rate hikes, and the rate hikes will lead to reduced earnings, right? And that's what a recession is. Recession does not mean
Right.
exactly mean, you know, the stock market is going to crash. What that means is that earnings are going to go down, right? They're going to have a hit, and that is something that we are already seeing. So, you know, so I agree that there is a fear which is true,
Right.
and careful about it, but you know, we have to watch for the data and see how it goes. But talking
Right.
about India in this scenario, I would not be too much worried about it. Yeah.
Fair enough. So you briefly spoke about, Fed rate hikes, right?
Hmm.
So do you think it's still a worry? And if so, the general notion about the market is that it's pretty overvalued right now. So
Hmm.
what's your thoughts on that, Sonam?
Yeah. So, yeah. So when we talked about the Fed rate hike, I think we had asked this question, Siddharth, right, to the audience. Uh,
Correct. Correct.
and some 48% of people said that they expect a 1% rate hike in the next year, right? Which seems reasonable. I
Correct.
think we saw that Fed has reduced the pace of rate hikes. They've gone from 75 to 50 basis points, right?
Mm-hmm.
And I think when the growth starts getting impacted, right, that's when, you know, they will take a big,
Right.
right? They are totally data dependent, right? So right now, um, if inflation is going down and, you know, they see a big impact on growth, they will reevaluate their philosophy, right? So I
Got
mean,
it.
so rate hikes might happen at a slower pace, but yeah, rate hikes are a worry. And you know,
Right.
that will continue to be very, you know, the year changing does not reduce that worry.
Right. Right.
Yeah, so that very stays. And is the market overvalued in, when you ask about it, right? I think
Mm-hmm.
again, it's a very interesting story, right? And we wrote about it in our blog post, which was India versus emerging markets, right? If you look at
Right.
India's PE ratios, they are at a 134% premium over the emerging markets, right? We are at a
Correct.
high compared to a lot of other markets, right? But there's a
Right.
huge reason for it, right? Because India did not spend too much during the pandemic, so we are not seeing that crazy inflation that the global market is seeing. We are seeing
Right.
relatively robust growth right now, right? And our economy
Mm-hmm.
is very diverse, right? Not very commodity dependent, but you know, working in a lot of different areas, seems to be doing
Mm-hmm.
strong, and we are seeing a recovery cycle happening. So that's why I don't agree that India is overvalued. It deserves that premium. And looking at its own historical valuation, we think we are at a good place, right? So I won't be that much
That's
worried.
fair.
Yeah.
Right. So when you say it's not overvalued, then it definitely means that it is a fair time to sort of invest in the markets as well, right? Because
Hmm.
you might not be able to get the prices that you're getting today, say in the next few months or quarters,
I
right?
mean, yes.
Or
I mean, I would not, you know, I mean, this is not a investment advice, this video, right?
right,
But
right, of course, of course.
definitely, I would say that, you know, I mean, I think I have taken a call right now to invest, and I think,
Right,
yeah.
right. That's fair. Also, is the market pricing in expected growth concerns due to the likely global recession next year? I mean, is that still a thing?
See, I think our growth numbers have been adjusted on the recessionary fears, right? So we have seen a little bit of downgrade in the growth projections that has happened, right?
Mm-hmm, mm-hmm.
And you know, we are pricing in some impact of the global recession, but like we touched upon a number of themes that seem to be working well for India. I think
Correct.
yeah, I think that you know, we are pricing in the expectations, but we are not pricing in a full-fledged recession, right? Which is still prediction instead of a reality, right? So if
Right,
again,
right,
if there is a big recessionary scenario that happens, you know, we would see some dent happening in the India market, right? We might see some correction here and there, but it's not. We don't see the market going down in a massive way, right? And
got it,
yeah, so yeah, so I
got
mean,
it. That's fair.
right. So LinkedIn, we did a campaign along with LinkedIn where, you know, the tagline was India might get dented but not drowned, right? So I think
Right,
that
right.
is the theme that we go with.
Correct. A little dent is fair, but yeah, we won't drown for sure is the optimism, right?
Right.
But Sonam, do you right? Uh, so Sonam, but do you think the earnings growth will be impacted due to a possible recession-led cycle? Hence, do you expect earnings downgrade going ahead when we specifically talk about earnings?
I do think that is a reality, Siddharth, right? So if you look at the earnings in the last quarter also, on an
Mm-hmm.
overall level, Indian earnings were down 4% because of the oil and gas companies mostly.
Right, right,
So we might, and if the global scenario sort of escalates,
mm-hmm.
right, the the growth sort of goes down globally, then that will have an impact in India as well, right? Which will be mostly in sectors that export to the global market. But
Got
uh,
it.
having talked about it, that's the risk that remains. But having talked about that, we have so many strong themes that are going strong in the India market, right? Which is
Right,
consumption, which is your credit growth, which is your manufacturing revival, capital expenditure, right? So these things will continue
right,
uh, take the economy going forward. We are seeing recovery in the rural economy also, so that like a lot of reports that have come in recently, they say that rural growth is going to recover, right? When that happens, then
mm,
we'll another set of growth coming back in the FMCG sector, etc. Along
that's
with
fair.
along with it, there are other many other positives that continue to be there in the market. So on overall level, we can't say that there are
Right.
positives, the risk out there. But yeah, if things escalate, then there is a risk for a downgrade in earnings, right? Which is expected.
Fair enough. So if there's an expectation for downgrade in earnings,
Mm.
what happens is most people start thinking that equity becomes less attractive than debt, right? Plus the interest rates are also on a rise. So what we would want to understand is the debt market looking attractive for investments compared to the equity market as a whole?
Yes, I think already is that if you for like you must be seeing that there's a lot of interest in debt products right now in the market. People are talking about corporate bonds now like they
Correct,
never used to, right? So
correct,
obviously, when the interest rates are high, then debts start looking attractive, and that is what might happen. And that's a fair enough thing. When you have rates that are that high, why won't you invest in a debt product, right? So
got
yeah, I
it,
think
got
that's
it.
going to be attractive, and I remember seeing the numbers, right? The volume
Mhm.
of debt product is expected to go threefold in the next year, so which is quite exciting.
Wow, wow,
We actually asked
right,
that here, we're talking about the themes
correct.
to be on in the next year, right? So we asked people about which factor will outperform in 2023, right?
Correct, correct. So when we ask people this question or we put this poll out there, the factor that would outperform in 2023, most people voted for momentum. So that's like a majority of 48%. However, they voted for momentum against various options, which was low volatility, value, and Atmanirbhar as well, right? So people are very bullish about momentum in 2023, is what we
Right.
understand.
Right. So we are also very excited, Siddharth. There's a lot of exciting research that we've been doing on the momentum factor. There's some upgrades that we're going to publish. We'll write about it, right? So yeah, momentum
Perfect.
looks increasingly strong. Value, on the other hand, value is the second rated factor, and value,
Right.
if you look at the market right now, value is the one that has outperformed, right? Momentum, in fact, has seen volatility, right? So I think value
Correct.
is also a good factor to sort of look at. Low volatility is also an interesting factor to look at in markets like now, which are highly volatile, right?
Correct, correct, correct. So also, Sonam, we had asked people this question: will the RBI sort of increase interest rates in 2023? This question or this poll is in line with what we were previously talking about, right? Debt versus equity as investments, which is more attractive.
Right.
So 75% of our audience thinks that RBI would sort of increase the interest rate in the upcoming year, right? So what do you think?
No, I think, see, if you look at the last commentary that the central banker gave, they were
Mhm.
hawkish, right? They did not rule out raising rates, right? So it might
Correct.
happen. But yeah, RBI is much more careful about growth, right? So if this growth getting impacted in the global market, then they will in fact reevaluate. There was another interesting
Right.
question that we asked people, Siddharth, which was the biggest announcement in budget 2023, right?
Oh,
And
yes, absolutely.
the options that we gave was lowering of income taxes, lowering of capital gain taxes, infrastructure spending, and divestment, right? And we saw
Correct.
50% people voted on infrastructure spending, which was extremely interesting.
Right.
This being a election year, we might expect a lower income tax or a lower capital gain tax. But I think a lot of people are betting on infrastructure spending, which is in line with our philosophy, right? Like I said, that we're going to
Mm-hmm.
see capex coming in from the government and from the private sector, and that's why we're
Right.
betting manufacturing and
Right.
the
Right. Very, very interesting, right? So, we this has been a very interesting session, right? However, to wrap things up, there's this question that even I personally have in mind, and I'm sure like everybody in the audience would love to know, right? So,
Mm.
given the market's volatility, Sonam, and as you were talking about rising interest rates, what should be the investment strategy for a retail investor in 2023?
Definitely. Yeah. So I think that's the most important question, right?
Absolutely.
Yes. Yeah. So given the market volatility and the rising interest rates, right? I think the first thing that the retail investor has to do is to look at his or her asset allocation, right? Your asset allocation has to be a little bit more careful in such scenarios.
Mm-hmm.
On your overall portfolio level, you should add some debt products, right, along with your equity allocation. Make your asset allocation healthy so that if there is volatility in the market, the impact for you is a little bit lower.
Right.
So asset allocation is important, and we talked about the debt products before.
Correct.
But talking about the equity allocation, which I think that for a moderate to high risk investor, it can be up to 75% right now. So that, to be honest, right, or more than that,
Fair
right, if
enough.
you're able to take high risk. And here again, I think I expect the markets to have a bounce back in January. We have a January effect that always happens at least for a few
Right.
weeks, right? So I
Right.
hope. And then then the budget's going to come in the first week of Feb. So you will see sectors linked to the budget start gaining momentum, right? And we talked about so many factors that we're betting on in the Indian economy, and we
Correct.
continue to be increasingly positive about it. And if you were to pick up factors to bet on right now, Siddharth, in the India market, I would say
Mm-hmm.
betting on the PLI Atmanirbhar theme is important right now, because it being a budget and being a theme of government spending, I think that is important.
Right.
Second, talking about our portfolios, I think momentum will continue to be strong. Smaller stocks are going to pick up pace at a rapid pace.
Mm-hmm.
So small caps was in fact our best performing portfolio in the last year, and I see that also going strong. So I
Right.
would uh so of the exciting products that Right Research offers, I would see, people can pick up uh, the New India, Momentum, Balanced, or any of
Correct.
our exciting baskets.
Wonderful. So this has been a very exciting session, Sonam. Thank you for patiently, sort of addressing all these important questions or burning questions, as we say it, right? Also, guys, if you guys have any further questions, feel free to drop a comment. We'll definitely respond to that. Also, we will link all our relevant blogs in the caption below, so you can have a read, get some context. So before we wrap up, I would just like to say, if you found this video really useful, do not forget to hit the like button. And for more such insightful content in the podcast format, do hit the subscribe button to Write Research. Thank you
Definitely.
so much, Sonam,
Yeah.
for your time.
And so that we are going to keep on continuing these videos on a weekly basis. We're going to be much more active. That's what we have sort of planned.
Absolutely.
Guys, please be posted about
Correct.
it.
Absolutely. There's a
Subscribe.
lot more coming, a lot more topics that we are going to cover. So do subscribe so you can get access to all the amazing content that we plan to produce in the future.
Awesome.
Thank you.
Thanks so much, Siddharth.